Rob, you have built security to tackle one of the biggest and honestly most urgent challenges in the digital world, fraud and identity deception. So from payments to social media to dating apps, trust online is being tested everywhere. And you have built something designed to restore it. That's no small feat. Let's dive in. Let's first go back to the beginning before even security ever existed. I know you made a pretty bold move, leaving corporate life to go build something of your own. What led to that decision? Tell us a bit.
Carol, I could go back a long way with that. I had my first seed round in 1975. And that was for $35 from my mum and dad. And that was to go and build a business that I could see when I was 15 years old. By the time I was 18, we had built a substantial business as a teenager, and I was still at school, and then went off to university and stopped. So I've been an entrepreneur all my life. There's no doubt about that. You're quite right. I've had highs and lows along that journey, and it can be exhilarating. I mean, entrepreneurs can make an enormous amount of money in a very short time, depending on the size of the total market that they're dealing with. So, yeah, you're quite right. I've owned all sorts of businesses, and I've built all sorts of companies, and it's probably what has got me to the point when I was 60 years old, and I decided we would build securely, and that's now because of everything that has been learnt along the way, has become an incredibly potentially prosperous startup and now scale up globally. And it's all those learnings. You're quite right. It's all the learnings from that 50 years of business that have led to where we are right now, and we're very fortunate. But when we started Securely, what we did was, instead of going out and hacking by yourself, working tirelessly, I put together a group of 5 people that had already achieved a great deal in their lifetime, and probably a lot of grey-haired wisdom. Probably we set forth to solve one particular problem, which was to essentially build an app like Airbnb, but it was for the, tradies or contractors to be paid and facilitate jobs. So contractors right around the world quite a lot of them don't finish jobs properly, and customers of the contractors don't pay them. So we set out to solve that problem by building an Airbnb type app where you've got a customer on either side, a customer and a client on either side, and someone in the middle holds money. At that time when we built the app, and it was a big build, we didn't realize what we were building and how big it was. But at that time when we built the app, at the same time we were in COVID, the world exploded with online marketplaces because no one could move. And we found that people were using the app we built for tradies to buy and sell on online marketplaces. They were actually using it to put the money in between the buyer and the seller. And we went, well, that's really interesting. That's not what we built it for, but clearly there's a need for that. So we went and built another app, a variation of the first one in 2021-22. And that was specifically for online marketplaces. So in other words, if you're in Singapore, Carol, and I wanted to buy something from you, an asset from you, a painting perhaps, the marketplace app works like I offer the amount of money, you accept it, then the money goes into an escrow type facility in between the two parties. You then know the money's there, then you send the painting down to Australia. Once I get it, I release the money. If it doesn't arrive, you don't get the money. It's pretty simple, right? But who would have thought? So when we built that and we finished that, we caught the attention of a bit of media locally in Australia. And then then the big 4 banks came knocking on our door and saying, well, listen, you guys have built something really interesting. We'd like to know more about it, and perhaps we can do something together. And that's what we did. So that was about 2022. And then by 2023, we realized that there was no orchestration in the world that provided this securely, sorry to use the pun, but securely between banks. And so we moved the orchestration, we moved the parts around in the orchestration and said, well, this should be bank-led. I mean, it should be, the banks should be leading this and reaching out to you and going, hey, Carol, we've got this new product. And if everything matches on your social media identity on Facebook or whatever, Snapchat, X, doesn't really matter, any social media platform. If it matches what the bank already has, we can give you a digital wallet. So whether it's HSBC or the Commonwealth Bank in Australia or JP Morgan in the US or ICICI in India, it doesn't matter. They can go out to their own customers and offer this solution to them. And we looked at it from that point of view and went, well, the banks already have all of that KY, know your customer information. They have your passport, your license, your photograph. They have all of that, your address, your telephone numbers. If they can match it up against your Facebook profile or any other social media profile, give you a digital wallet to go and buy and sell on any platform in the world, any online platform. And the beauty of it is it's not just the part of tethering the profile, the Facebook profile to the bank account. It's the actual mechanism in the middle where the money is held until the asset arrives in good order. And we've heard of and I hate to use this, but we've heard of the Temu scams where they say, oh, I'm selling this, and it turns up it's this big, and it's supposed to be much, much bigger. So funny little scams like that. But so that's what we built. And then we realized that no bank on the planet had actually developed that orchestration. When we realized that that wasn't the case, we then went and looked at patents to see, well, surely some bank, it can't be just one little small startup from Australia building this orchestration. There must be a bank that has thought of this. We looked at all the patents. This is, mind you, back almost 3 years ago now. We looked at all the patents globally and we narrowed them down. We got down to about 70 out of 70,000 payment patents. And about out of the 70, PayPal probably owned 60 of them. And we couldn't find anything that was similar to what we were building. So we lodged the patent application, and then, moving forward 2 years, the patent has now been found to be, by the patent examiners, to be novel. And we're the only ones in the world with this particular patent in this vertical, this payment vertical, that provides a solution that everyone has been looking for. The difficulty of payments online is not just confined to the marketplaces. Elon Musk has talked about this since before he bought X, or Twitter at the time. He said, I want to apply a bank account to every one of my Twitter accounts. Everyone's Twitter account should have a bank account. And then he bought it for $33 billion 2 or 3 years ago. And he came out the next day, the following day, and said, I've just paid $33 billion for Twitter, and half of the profiles are fake. All of those profiles, all those bots and those fake profiles make the social media platform a lot of money. So
I can imagine that. Maybe you could explain to us in 1 or 2 sentences what security does. And I also know you have a product within security called Social Media Integrity Systems. So tell us in 1 or 2 sentences, what do they do?
Okay, so SMIS, which you're quite correct, that is one of the security products, and that's the marquee product that we've just been talking about. So at the start of it, it's like this. A bank will go and license that from us, and we will provide the license for them to use that in their territory. They can then on-license it to the other banks in the territory. And the bank will then provide their customers a solution to apply a digital wallet from the bank and attach it to the social media profile. So let me just be very, very clear. No one from the social media world can see anyone's bank account. It is run by the banks. All they do is tether. Let's just use Facebook as an example. It can be any social media platform. They would tether your, Carol Chen's, Facebook account to the bank account and say the photo matches, the name matches, the mobile phone number matches, and the email matches. So Carol Chen on Facebook is actually Carol Chen at the bank as well. And then once that's tethered, cryptographically tethered, then the bank attaches that to your bank account, and gives you a digital wallet to then go and trade online. So anyone you talk to from a social media identity securitization point of view, they will know that your bank is saying, this is Carol. This is not someone else. This is actually Carol. And there can't be two of you because there can only be one account tethered to the bank account.
So in that sense, your direct customers or counterparts are banks and institutions, payment platforms. You don't deal directly with consumers who have social profiles. And also, presumably, the consumer have to provide their real profile on their social platforms. Let's say all the phone,
Correct.
name, email, photo have to be real and identifiable. Let's say their profile photo cannot be something blurry or an avatar, for example, right? Because
Correct.
that
Yep.
has to be linked to their banking financial identification.
You're absolutely spot on, Carol. So if you have your profile photo of a motorbike or a surfboard or an animal that you love, you won't be certified. You won't get the approval.
So do you foresee any pushback at the bank side from their, let's say, from consumer where they have their social profile? Because in that case, it's harder for them to create social profiles, right? They have to kind of expose their real information online. Would you foresee any pushback from that term?
Well, we're not seeing any pushback at all from the banks as they're implementing this and they're licensing it. The reason being is there can be copies of Carol Chen, for example, or copies of Rob Neely, and there are copies of my profile, right? And they're from scammers. So, but only one of my profiles can have a bank account or a digital wallet attached to it. So it doesn't matter how many scammers are trying to copy my profile. Only one will have a digital wallet, and only one can actually do a marketplace transaction with you through that digital wallet. And so it's a security from the bank side saying, this is who we know. They've got a bank account. And what's more, the money is held. So that won't be released. There's nothing that can, until the asset arrives, the money is held between the two accounts, right? So it's like a double jeopardy. Number one, the bank's saying it's you. Number two, the money's held until that lovely painting that you're sending down from Singapore or from Asia arrives at my house.
Right. So my question now is, why are not existing payment systems enough to stop those frauds? Why haven't anybody thought about this solution before, since social media is not new thing? Facebook has been around for, let's say, 20 years, since long time ago. How do you see this?
Yeah, look, it's another great question. Okay, so Facebook's been around for quite some time. However, Facebook Marketplace has not been around for quite some time. It was developed around 2016. By 2020, it had maybe 60 countries using it. And as the last 5 years have gone, it's ubiquitous. It's right around the world, right? And for example, in India, there's 440 million profiles and marketplace profiles in India. And they're expecting that to go to 800 million. So it's been growing. So what we're seeing is Facebook is taking over the classified advertising space globally. So, if you go back 10 years, you would go and buy a newspaper to look for an ad for something you wanted to buy. Maybe not 10, maybe 15 years, right? But now it's all online. It's all free. And if you want, it's the same for the car purchase platforms like car sales, which is a global platform. Same thing. They're already using our technology. They're already using our orchestration end to end. So you can go to carsales.com right now and buy a car. We can buy and sell a car between each other, and the money will be held by car sales until the car turns up. And it's got to turn up in the order it was agreed to, right? So why aren't the banks doing it?
Rob, can you explain a bit what does orchestration here mean?
Orchestration is the end-to-end, what we call a payment rail. Okay, so payment rail. Oh, let me just back up a little bit. Payments and bank payments have developed enormously over the last 5 to 6 years, and a new type of applications in banks, which is called open banking, is now available for people to use, right? Or banks to use, banks to provide to their customers. This is global. So What we're seeing is maybe 5 years ago, your bank would have been dealing with another bank or a payment service provider like Mastercard or Visa and so forth, and all the new ones that are out there, right? Now the world is getting open banking, and what you will see in 5 years' time, you will see rather than people probably in 5 years' time will more than likely sign up with GPay or Apple Pay for a bank account. So this is where we're seeing the world moving to because of the digitization of bank accounts. Previously, and one of the problems that Elon Musk found when he went out to develop the X payment applications for his subscribers, for the Twitter subscribers, was that he had to get a banking license in every territory of the world. Okay. So with open banking, we're now seeing that it's far easier for the globe to trade. Just reflecting on your previous question, we were astounded when we found that no banks in the world had thought of this orchestration either. Okay, everyone was starting from the payment from the social media platform. It's got to be the bank. It's got to go from the bank, and they've got to then, just like a loyalty card for an airline, your bank might attach your airline membership to your bank account, right? Or there are other loyalty cards that are attached to your bank account. It's no different to what we're talking about, but no one had thought about providing a digital wallet. It's quite unique. It's really cool.
I want to bring something up. I believe you probably are no stranger to WeChat, which has a wallet solution attached to it. I know in China, for example, using WeChat to pay is quite universal already. It's very common. But I believe one big difference between other kind of other countries' social media platform is that attaching a wallet to it, they have to navigate through different legislations. The complexity they are dealing with is not comparable to what WeChat is having. They are who is pretty much a monopoly in the market, so it's easier for them to kind of operate in a more unified market. So for your case, when platform like Twitter, Facebook, or even TikTok globally want to implement this kind of solution, they have to collaborate with banks across different jurisdictions, right? So in terms of this legislation complexity, what's your take on that? In order to, kind of improve the adoption for your solution going forward, it has to go through the social media side.
Yeah, agreed. And so WeChat is a great example. And we've had a long discussion going on with various private equity players in China at the start of this year. And by the time we got to sort of June, we actually went back to them and said, look, WeChat, and there's another platform there as well, that they've got it covered, right? It's not exactly what we're doing, but they provide the service of what we're doing, right? But that's integrated into WeChat, and that's been going. I mean, I think WeChat's founded around 2015 or something like that. And so they've matured. What we've seen outside of China, and it's such a great question you've asked, right? What we've seen outside of China is the rest of the world has not matured. It's the legacy banking systems is state-based. They have up until open banking came in, they really didn't talk to each other apart from through APIs where they'd send money across, and sometimes it'd take 2 or 3 days, maybe a week, right? But now it's almost instantaneous. So it's grown, but there are still legacy banking systems in the Western world that are stopping this from occurring. So to that extent, you're right. WeChat in China are miles ahead of what is available in the Western world. Yep. No, good pickup, Carol.
Yeah. In that case, in your collaboration with, for example, right now, the banks and payment platform in Australia, have they taken your solution have they taken your solution to the cross-border payments? Have you received any kind of feedback from that layer? So if any consumer, let's say in different countries who want to use your services through the banks in Australia, have you gotten any feedback on that?
Yeah, so another great question. You've really prepared for this podcast really well, Carol. Okay, so we are, of course, limited by each banking system. Okay, we will license our orchestration and the use of our patent to a territory and generally a bank within that territory. For example, we could use, let's use India as an example. So one of the large banks there, HDFC or ICICI, could license it from us and then sub-license it to all the other banks in India, of which there's some 2,000 of them, right? But that still doesn't solve the problem between international payments. You still end up with that legacy system. And then you've got other players outside of that, like Airwallex, which was an Australian company that's now domiciled in Hong Kong, I think, operating in that area itself. You can still do international payments, but it's clunky. I mean, even this morning, I was paying for some flights in New York next week and trying to use my Visa card from Australia to pay for the flights in the US was clunky. It took 2 or 3 times to do it. So, yes, the answer to your question is we are constrained by the existing banking infrastructure, but it is moving ahead at such a rate that I think we won't recognize what the question you're asking, we won't recognize that in 5 years, in 2030. And by that, I say that you're seeing major international tech platforms come into the payment system like GPay, like Stripe, like Apple Pay. Okay. So they work all internationally and they work seamlessly internationally. And this is where the banks have got to catch up. You're quite right. Good question. Yeah.
How about with those fintech platform who some might already have kind of banking license already got, some might already got their banking license, some have not. For example, Wise or Revolut, such kind of fintech platform. So would your license be applicable to them as well, or do you have to collaborate with just the one who have banking license?
Some of them are financial players, but they're not banks. Okay.
Yeah.
And they work outside the banking system as such.
Yeah.
And that happens in a lot of countries now. So they appear to be a bank. They have cards provided to their customers, but they're not actually a bank, right? They're a financial institution.
Yeah. They don't have license. Yeah.
Correct. Yeah. Spot on. Yeah. So that would then trail down through APIs and SDKs back into their own ecosystem. So the integration is as best as what each bank can provide. So that's why we're licensing to the major banks in each territory, and then they can sub-license from there. And we're not involved. We have no visibility apart from we will take a fee for every transaction. So when I say a fee for every transaction, so for example, if you use Apple Pay right now, right, every time you use or someone uses Apple Pay, 8 cents per transaction goes to Apple, right? So we're the same. So the banks will use or are going to use our orchestration, and they will pay depending on the size of the territory and the amount of customers they've got onboarded. They will pay between 2 at the very bottom and maybe 8 cents, maybe 10 cents in some of the smaller countries and smaller territories. Yeah, but it does integrate, but it does integrate through the existing banking platform.
So can you license to Visa and MasterCard, for example? Because strictly speaking, they are not a bank.
No, they're right. Golly gosh, you have really, really dug deep. Well done. Great questions. The best questions I've had, to be honest. Okay, so you're quite right. So they're a payment service provider, and they sit outside the banking system as such. But not, every day people would think that they're part of the banking system. Well, they are to the extent that they integrate and they provide a service. Okay, so they're a payment service provider. They don't have a banking license as such. In fact, their model is exactly the same as ours. Their customers are the banks, right?
Yeah.
Our customers are the banks, and then the bank's customers are part of that facilitation. So have we spoken to MasterCard and Visa? Yes, we certainly have. We've had some very, very deep and meaningful discussions. And one of the core components of our orchestration, and I'm not saying this can't be overcome, and we're working towards overcoming this, but all of the know your customer data, all the stuff, all of the passport, the license, the name, that's held by the bank. It's not held by MasterCard, not held by Visa. We're a third-party payment service provider, and you may see in 4 or 5 years, you may see Securely is controlling the vertical from online marketplaces, and it might be GPay, Apple Pay, Securely Pay, whatever. We're not sure. Because that may be where it goes to. Great question. Really good question.
So the key points here sounds to me are the verification KYC part. Depending on where that part of the data sits with, that's a key where you have to have their say in the whole equation.
Indeed, because it's the customer that will give the approval. So, Carol, you would say to your bank, yes, here is my URL, here is my handle from Snapchat or Facebook or even Tinder, right? I'm not saying you're on Tinder, but even Tinder. It's a social media platform, right? So your handle is then provided voluntarily by you to the bank as their customer, and then they go and do all the integration from there and the verification and certification. If they identify that the handle you've given them is in fact you, they will then give you a digital wallet, a separate digital wallet just for the online marketplace. Now, the online marketplace transactions at the moment through Facebook Marketplace and all the other marketplaces are around 17 billion transactions a year. So to put that in perspective for listeners, PayPal did 24 billion transactions last year globally. So it's almost the same size as PayPal right now, but there's no uniform specific payment application attached to it. You've got to make your own. You've got to take a leap of faith and pay, or wait until the asset arrives, and then the seller hopes it gets paid. And that, of course, is where the scammers are coming in, right? So that 17 billion, out of those 17 billion transactions, there's billions of them that are actually scam transactions, right? And that's why we now have about $1 trillion a year globally being lost to scammers. Now, a trillion, it's pretty easy to say a million, a billion, and then a trillion, but a trillion's the size of the Australian economy. That's huge.
No doubt. Yeah, this is a huge market. And I believe lots of new emerging tech solutions are trying to work on this space. Now let's talk about adoption, right? Because your target customers are the banks who have license in different legislation. So I know that even with a pretty solid product, getting traditional players like banks, institutions try something new is never easy. So I would like to know, how did you break through that resistance at the beginning and get your early partners on board?
And banks are slow, as you say. They're very, very slow at bringing on a new product, right? And of course, what's happened in the last 3 years? We're seeing AI and then, agentic AI come into place, and it's speeding everything up much faster. I mean, I was at a conference yesterday in Sydney, and they were talking. It was a big platform, and I won't mention their name, but they were talking about the application of agentic AI, and we went through workshops to actually implement it with about 60 or 70 people, and it had to be broken down to 6 or 8 tables to actually implement one orchestration with agentic AI. But what they said was, which was really profound, they're now finding that as they adopt agentic AI and bring it into the large language models and the specific cylinders they're working in, they're saving sometimes what would take 44,000 hours for one project. They're doing it in a month. So banks have got to get with it, and look, we're seeing it all the time, and hopefully we're seeing some banks that are very proactive in Australia. We're seeing some in the US. I think it's probably fair to say it's the same worldwide, and it's actually the banks like PayU, which is not a bank in India. They're very very aggressive in the technology space, and I think that's what's going to win. And that's why we're seeing GPay and Apple Pay and Google, all of the other different platforms making such a big dent, because it's so easy for the consumer to use it. So we need to integrate it in there. But I think we'll catch up in about 4 years overall. Sorry, it's a long answer.
That's very interesting forecast, and also lots of great points you brought out. With tech being developing at such a fast pace, I believe kind of all the traditional institutions have to catch up, no matter how pushback, how resistant they are to new emerging things. They realize that they have to play the catch-up game quite quickly, because genetic AI and new emerging tech, including blockchain, even the payment authentication, it's something they cannot go around with, right? One day they have to come back one day. So my question now for you is that, have you seen this setting cycle kind of speed up over the past 2 years or 3 years? Maybe at the beginning was slower, but now they slowly kind of move faster in your setting cycle conversation.
Well, okay. So again, a terrific question. It depends on the territory, I guess. So if you look at territories that are very digitally dynamic, and when I say that, what I mean is if you look at, say, perhaps the Indian financial system or banking system, where they use UPI or Universal Payment Interface, everyone has a QR code in India, right? They're quite quick at adopting new technologies, albeit the banks still have that strata management application. You've still got to get all of the departments in together, but they're quicker because the Indian government has said, or the Reserve Bank of India, to be honest, has said, this is what we want to do. This is how we're going to handle our 1.2 billion people. And the only way to do it is digitally. We can't go back. So they're great. And then you've got other banking systems that are not so mature digitally. And look, I think it's fair to say everyone would know if you go to the USA, you still use the old, credit card system where you swipe the thing across a board, and it takes an imprint. They're still using that in the US. In fact, they're still using checks in the US. So the answer is difficult for me to provide it holistically, globally. The US is still using checks. Australia's almost got rid of checks altogether. Yeah. So it's the more progressive governments with the larger populations around the world, okay, that we're seeing the adoption of digital banking at a faster rate, which is odd. But look, overall, everyone recognises that scams are ubiquitous and they are universal. So it doesn't matter what the banking system's doing. The scammers are leveraging the outdated legacy models, right? I think we'll probably see our very first customer use of our product maybe by the end of this year. No, let's say at the first quarter next year, because things move slowly. So it'll start rolling out, and our patent is applied around the world anyway. We've got 150 countries our patent will apply to. So securely, or it's the use of its orchestration is going to be around for a long, long time, and customers may not even know they're going to use what we've done. But if it helps people from stopping being scammed, I'll be a happy man.
It's definitely a challenging space you are playing in. Wonderful. So now, because you have made so many bold moves to pivot in the past, I imagine it must be costly, right? Every time you rebuild an MVP or you rebuild kind of the direction of the company, you spend more money on it. Let's talk about money. Is it security bootstrapped? I know you have also warned the founders to not take the first check they are offered. So what is your take on that? And why is that? What kind of early stage funding mistakes have you seen founders make?
Your equity is your oxygen in a startup. Okay, so if you if you give away equity at an early stage, in a seed round, right, that the cost of that to you in 2 or 3 years later, if you're becoming successful, could be tens of millions of dollars, if not hundreds of millions, depending on the size of the market and the TAM you're working with. Well, let me just back up a little bit. When we were building the MVPs 5 years ago for the original securely orchestrations and contemplations and apps, that probably took us, each app probably took us 8 to 9 months to build at around 300 to 400,000 US dollars, right? We can now build those apps probably in a week at a cost of about $100, right? So the important thing with founders is to stay absolutely on top of the technology because it's moving so quickly. And if they don't believe that, if people don't believe that, you can just look at even last December, ChatGPT, for example, brought out ChatGPT Pro, which in December last year was like, whoa, this is crazy. And it's now a legacy model. In fact, it's gone, right? So that's how fast we're moving. So people can do and I'll get back to your point about how much it's cost us and so forth. But people can build proof of concepts and MVPs through use, like Replit, for example, will build just about if you're good at what you're doing, right? You can build an MVP in Replit in probably 2 or 3 days, right? Whereas it might have taken 8 or 9 months previously. So you can get to your proof of concept and your beta and go out and do A/B market testing straight away. I mean, everything's condensed. We've been fortunate enough to have one party, one of the founding equity participants, pay for this whole journey, and it has been, you know, so she has done seed right through to just below Series A. And we only just recently gone out and did a Series A earlier middle of this year in May and June for $6 million or $5 million US on a pre-money of 61 million US. And it's a great story, in fact, from the point of view that I think you'll find venture capital certainly in some countries. So what we found was we actually had one player in the US who's big in the fintech market come to us and said, look, you're too small for our company to invest in, but I'll write you a personal check for the whole lot. That's it. End of story. No requirements, no preemptive rights. I will buy equity in the company and I'll take the whole amount out. So we've been very fortunate that we've been able to get to this point where we've gone through the the $6 million mark and then the $20 million mark. And we've had advisors say to us, sell at 20 million. And we've all gone, no, this is bigger than that. This could be really big. And then we've got, and finally we got to 100 million Australian dollars or 61 million US. And we know that that's still a starting point, Carol. And thank God we've been funded by a family office that's close to us, because otherwise, yes, we would have had to take outside parties in, and you release equity, and then you release control eventually. And when I hear some terrible stories out there where founders end up with 2% of their company.
Yeah, absolutely. As you pointed out rightly, VC world cannot keep up with the pace at which technology are developing, right? As VCs stepping back and technologies are moving ahead, I believe you said it rightly, this actually creates enormous and lucrative opportunities for founders, right? Because I definitely believe a few years down the road, we will see more and more kind of solo founder creating billion-dollar companies, because it's become so easy and so efficient to build a company. It doesn't require a few $100,000 to start with. And within a few weeks, they can build something that has immense value. So that creates huge opportunities for entrepreneurs going forward, actually, around the world.
If you're a founder, if you're a startup founder and you've got a novel idea and you believe in it and you check the veracity of the commerciality of it, okay, it's got to be commercial. But if you do that work, and that's not hard to do, you can do it on any LLM. You can go, what's the size of the market? Who are my competitors? You can have all this done in an hour, right? But if you do all of that hard work and make sure that your idea is not already in place somewhere else around the world, then use the Nike term, just do it. Do it, right? Go for it. And, just the only other thing that I'd like to say to any founders that are listening, don't be afraid, right? Have a crack, just do it. And just remember to focus on the minutiae. You've got every tool in the world on your laptop now that you need to do all of this exhaustive research work that we never had years ago. If you believe in it and it stacks up, and check it with your family, and then take money from your family and your friends. Don't go outside.
Before we wrap, one last thing. We like to close off every episode with this. If you had to leave a question for the next founder coming on the show, what would you ask him or her?
Ultimately, is have you asked yourself why you are doing this? And that can be brought down to just one word: why.
So your question is, what is your why to the next founder? Rob,
Yes.
This was fantastic. Thank you so much for walking us through the journey of security. Thanks again for being here, Rob, today.
Thank you, Carol. Thank you for having me on.